What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what's going on in the crypto space. And again, yesterday, it's like I was under the weather. I'm still not 100%, but the Bitcoin price was just going with it. But right now, yeah, we dipped down to 98,000, but we are back at it. 103,808. So that was a very short-lived dip going on, but what did happen? So I'm going to cover a couple articles talking about like why did we see this price dip, what's going on, and I think it's honestly just the same tale as old time. Like big players, elites, send over crypto to an exchange, and then they're scaring the market, making them think, uh-oh, these big guys are going to sell. I got to sell before they do. And then the big guys end up just buying more. And that's what we kind of got yesterday. We got BlackRock is dumping Bitcoin and ETH on Coinbase. Last time they sold directly on exchange, the market nuked. What are they seeing this time? And then also BlackRock starts dumping BTC again, breaking in the past 7 days. BlackRock moves. So again, this is like just scaring the market of people who don't have the long-term holding plan. They're going, uh-oh, I got to sell, and price going to go down. And then, of course, what happens is Bitcoin whales are feasting with a 50,000 Bitcoin scooped up in a single day. So it's a tale as old as time. Just the price dip, big guys scared the market, and then they bought the dip. And that's basically what took on. But let's cover this article from Bitcoin Magazine on the Bitcoin price that plunged beneath $100,000 as extreme fear did hit the market. So Bitcoin's price just tumbled below $100,000 for the first time since June. Now, well, the Bitcoin price bleeding just doesn't stop. Bitcoin price just tumbled below $100,000 for the first time since June, marking a fresh low in a rough stretch for the world's leading cryptocurrency. Now, Bitcoin's price hit $99,913, but rebounded to $100,000 at the time of this writing. But the Bitcoin price slide comes as investors flee risk assets and macro headwinds. Now, the cryptocurrency market dropped more than 5% early Tuesday, briefly testing levels not seen in months. Traders watched nervously as the coin broke below key technical support around $104,000. That move yesterday fueled concerns that further losses could be imminent. Now, spot Bitcoin ETFs have seen a wave of withdrawals. Investors pulled more than $1.8 billion from Bitcoin and Ethereum products over the past few trading days. Now, Ethereum and Solana were hit harder, each falling over 5%, while crypto-linked stocks like MicroStrategy, Coinbase, and Robinhood slipped at least 3%. Now, the crypto market today is facing multiple near-term headwinds, said Derek Lim, head of research at Caledon, per Bloomberg. Now, this is hitting a market that is already fragile from October's massive liquidation event and a string of hacks. Now, all this Bitcoin price resistance started when, on October 10th, Bitcoin and the broader crypto market witnessed a drastic and sharp sell-off as President Trump announced sweeping 100% tariffs and exports control in response to China's new restrictions. Now, despite improved trade talks with China, Bitcoin's price has not recovered and has slumped much further than the sell-off lows. Now, Bitcoin's price reacted to the Fed's hawkish tone as well. So the Federal Reserve has also weighed in on sentiment. Fed Chair Jerome Powell recently walked back expectations of a December rate cut, signaling that interest rates could remain higher for a longer time. Now, Powell said that the additional rate cuts may not follow in December. The central bank reduced its benchmark interest rate by 0.25% percentage points to target range of 3.75 to 4%. Now, Powell said that the inflation, including the impact of the tariffs, is not so far from the central bank's 2% target, but emphasized that policymakers have not made a decision about December. Now, Powell noted that officials held strongly differing views during the meeting. The cut that the Fed's second of 2025 after a move in September ended a long stretch of rate holds. The policy shift is intended to lower borrowing costs and support economic activity. Now, the stronger US dollar has pressured non-yielding assets like Bitcoin, adding fuel to the sell-off. Now, technical charts show that Bitcoin's price has struggled to hold its 200-day moving average, a key long-term indicator. Analysts say that the next line of support sits near $96,000 on the upside. Reclaiming $111,000 would be a first step toward regaining momentum. Now, market sentiment reflects caution. The crypto fear and greed index shifted to extreme fear on Monday, a stark change from last week's neutral readings. Now, open interest in Bitcoin's perpetual futures has fallen roughly 30% from October peaks, indicating that leveraged traders are stepping back, according to Bitcoin Magazine Pro. Now, some bulls are still buying the dip. Strategy, the firm co-founder by Bitcoin evangelist Michael Saylor, purchased 397 Bitcoin between October 27th and November 2nd at an average price of $114,000. Now, their move is a small but notable vote of confidence amid the turbulence. Investors now look ahead to the U.S. Consumer Price Index report due November 13th. Now, cooler inflation data could spark speculation of Fed easing and a potential boost for Bitcoin. Until then, sellers remain in control and sustained close below $100,000, which could trigger deeper losses. Now, despite the pullback, Bitcoin's long-term story remains intact. It surged from $5,000 in March 2020 to over $126,000 in October 2025. Now, highlighting the coin's volatility and resilience, but for now, traders are treading carefully, wary of further downside as the markets digest October's historic losses. So again, people are still speculative on it. Where can we go as of right now, though? Again, Bitcoin is at 103,000. It's making its way up, so we'll see if it holds its support level. Let's see if we take a look at the week chart. Let's see if we can make it back to the 110 level. And then once we're there, hopefully we can just keep going. But again, is it because of the government shutdown? Once that's over, are we going to see some price movement happen again? Again, lots of stuff to be taking account for. But right now, I say tread cautiously. If you're a long-term Bitcoin holder, it doesn't matter about this price dips. You just want more Bitcoin. If it goes lower, awesome, you're getting a cheaper price. But if you're a trader out there, I'd be very cautious right now. Now, let's continue on with the news. What else is going on? Looks like Metaplanet, it's been a while since I heard from them, but they draw a $100 million Bitcoin-backed loan to buy more Bitcoin, so they're still buying. Japan's strategy equivalent isn't slowing down. Metaplanet just tapped its $100 million Bitcoin-backed credit line to scoop up more Bitcoin, doubling down as the markets wobble. So big players are still buying. Now, Tokyo-listed Bitcoin treasury firm Metaplanet has tapped a $100 million Bitcoin-backed loan to fuel further Bitcoin accumulation. Now, expand its income business and potentially repurchase shares amid mounting market volatility. Now, the borrowing executed on October 31st and disclosed today, November 4th, marks the first drawdown from Metaplanet's $500 million credit facility announced in late October. Now, the funds will primarily go toward additional Bitcoin acquisitions, according to the company. Metaplanet's loan is collateralized, or the funds are primarily go towards additional Bitcoin acquisitions, according to the company. Now, Metaplanet's loan is collateralized by its 30,823 Bitcoin, worth roughly $3.5 billion, and represents just 3% of its total holdings. Now, this is underscoring what management called a conservative financial policy, according to CoinPost. Now, the agreement features no fixed maturity date and allows repayment at any time. Given the company broad flexibility, the lender remains undisclosed, but reportedly offered flexible daily renewable terms and variable rate tied to the U.S. benchmark. Now, Metaplanet is expanding Bitcoin's income and buybacks. So Metaplanet said proceeds from the loan will also be allocated to its growing Bitcoin income business, which generates yield through cash-secured options, writing, the strategy allows the company to earn premiums while holding Bitcoin long-term, a structure designed to offset volatility. Now, that business segment has grown rapidly in quarter 3 of 2025. It produced 24.4 billion yuan? Let's just say 160 million US dollars in revenue, a 3.5 increase year over year, according to its filings. Now, a portion of the funds may also support Metaplanet's 75 billion share repurchase program, authorized in late October. The company plans to buy back shares whenever its market value falls below the value. Now, I hate when this does that. Market's value falls below its value of its Bitcoin holdings. Now, this is a threshold breached last month when its modified net asset value ratio slipped down to 0.99. Now, Japan's Bitcoin treasury giant, since pivoting from IT services earlier this year, Metaplanet has become Japan's largest corporate Bitcoin holder and now ranks 4th globally, trailing only MicroStrategy, Marathon Digital, and Hut 8 Mining. Now, the Tokyo-listed firm has committed to an ambitious goal of holding 210,000 Bitcoin by the end of 2027, cementing its role as Asia's most aggressive institutional Bitcoin accumulator. Now, its treasury strategy mirrors that of Strategy, which continues to issue debt and equity to expand its Bitcoin position, now exceeding 641,000 Bitcoin. Now, Metaplanet partners with SBI VC Trade for custody and trading operations and maintains what it calls sufficient collateral coverage to withstand major price declines without risking liquidation. Now, as of the time, Bitcoin was trading near $102,600, down 1%. And I think we're actually up again right now. We are up 1% now, so very, very nice. But yeah, so Metaplan is killing it, and they want to hold 210,000 by the end of 2027. Is that possible? I think it is, and they will secure and solidify their spot as the top Asian business out there holding Bitcoin. So keep up the good work, Metaplanet. Keep stacking those sats. Just keep proving all the small retailers wrong, thinking that Bitcoin's nothing. It's still a Ponzi scheme out there, but they're just trying to make money off of it. It's like, no, you keep doing your thing because you understand that Bitcoin is the next reserve asset of the world, and you just want to position yourself right. So that's our Metaplanet news going for you, where they're still collecting Bitcoin. And who else is about to consider buying cryptocurrency? Well, it is Kazakhstan. They are considering buying cryptocurrency with gold and foreign fiat. So let's hear about this article. So Kazakhstan's monetary authority is planning to convert some of the nation's existing reserves into crypto assets, one of its top managers has indicated. Addressing lawmakers, the high-ranking executive added that state-owned enterprises could also contribute to the country's new cryptocurrency reserve. Now, Kazakhstan's central bank intends to buy crypto. Deputy chairman of the National Bank of Kazakhstan, Barik Shopakalov, revealed that regulator may invest money from government-controlled funds and part of the country's gold and foreign exchange reserves in crypto. Now, the banker made the announcement at the Majlis, the lower house of Kazakhstan's parliament, where he was answering questions from members of the legislature. During our meeting devoted to the new banking law and other amendments to finance legislation, Shopakalov commented on the Central Asian nation's cryptocurrency reserve. He was specifically asked by deputies to explain how it will function and accumulate its funds, and whether the NBK is going to buy and sell digital coins for profit. Now, the deputy governor reminded Kazakh deputies that the government is currently working on the establishment of a state crypto reserve. Crypto assets confiscated in criminal cases would be primarily allocated to the new fund and kept as a strategic reserve, he elaborated. Now, at the same time, other options for replenishing it are also being discussed, Shopakalov pointed out. Quoted by the local news outlet Kurziv on Tuesday, he stated that we are considering using some of the other assets in the National Fund and gold and foreign exchange reserves to invest in crypto assets. Now, Kazakhstan's National Fund comprises financial assets held in the government's account at the central bank, as well as other tangible assets out there. Now, its main purpose is to ensure that the country's stable social and economic development and accumulate financial resources for the future. It's also being employed to reduce the dependence of nations' economy and budgets on adverse external factors and fluctuations in global prices of major commodities. Now, it serves both as a savings and stabilization tool in the hands of the executive power, providing long-term returns on low-risk investments and sufficient liquidity when needed. Now, the National Fund is managed by the NBK under a trust management agreement with the government of the former Soviet Republic. Now, other ideas to acquire crypto are also on the table. Kazakhstan has been in development as a crypto hub ever since it attracted a significant number of miners in the wake of a Chinese ban on the activity earlier this decade. Lately, this process has been actively supported by the authorities. Now, Barik Shopakalov also revealed that Kazakhstan's Ministry of Digital Development is considering a proposal for state-owned companies to start mining cryptocurrency. Furthermore, the government-run enterprise could be providing energy resources and related services to private mining firms, which would pay the bill in crypto assets, he highlighted. Besides expanding its legal framework for the crypto market, Astana is recognizing the great potential of cryptocurrencies to serve as a reserve asset too. Now, the establishment of the Strategic Crypto Reserve was ordered by President Kassym-Jomart Tokayev in September. The country launched its first crypto reserve fund later the same month. Now, this year, the Republic of Kazakhstan also became a major buyer of gold, increasing its reserves of the precious metal by 32 tons since the start of 2025, as reported by Cryptopolitan. Now, amid all-time highs, the NBK ranked among the world's top investors in gold, acquiring 8 tons of it in August alone, more than half of what all central banks purchased that month, according to the WGC, the Gold Industries International Association. Now, the net international reserves of the regional economic powerhouse and Eurasian crypto hub Wannabe hit a record level as well, reaching a total of over 52 billion at the end of the summer. So Kazakhstan is talking about using other assets to purchase crypto. It's not verified yet, or it's not official yet that they're going to do it. But we're hearing the rumor. So this is like the buy the rumor, sell the news type of thing, where it's like Kazakhstan is considering buying it, and if they do, expect price to go up. So this is your chance to get in before they actually do it. But again, it's just talk. Nothing is set in stone yet. But if they do, they're a very smart country. Now, let us continue on. Like, what else is going on around the world? It looks like Canada's Fed's 2025 budget plans to introduce a stablecoin law. So just like the U.S. with our Genius Act and Clarity Act, looks like Canada's trying to introduce some stablecoin laws right now. Let's find out about this. So the Canadian Department of Finance unveiled the stablecoin regulation proposal in its 2025 budget plan, which would require all stablecoin issuers to maintain and manage adequate asset reserves with clear redemption policies for the protection of users. Now, Canada is set to introduce its first national framework for regulating fiat-backed stablecoins under the 2025 federal budget. According to a proposal shared with lawmakers on Tuesday, the law will also add more privacy protection for Canadians through national security safeguards for digital financial operations. Now, the Bank of Canada will set aside $10 million in the 2026-2027 fiscal year, and the next one coupled with a $5 million in annual operating costs covered by fees collected from issuers regulated under the Retail Payment Activities Act. Now, Canadian stablecoin law proposed inspired by Genius Act. The proposal did not specify when legislation would be tabled, but officials familiar with the draft said it was inspired by United States pro-stablecoin Genius Act and Cryptopolitan Report. Now, some naysayers of the legislation are dreadful that the Canadian versions does not precisely define what constitutes a stablecoin or which agency will have regulatory authority over the assets. Now, in the US, the stablecoins are categorized as payment instruments, and oversight primarily happens at the federal level. Now, in Canada, however, digital assets like Bitcoin and stablecoin are still treated as securities, regulated by province and territories. Since stablecoins are also payment instruments, similar to cash or credit, they fall partly under federal authority. Sorry, still cleaning out my sinuses. But the dual characterization has created regulated uncertainty and confusion for companies and consumers within Canadian borders. Now, Ron Morrow, the Bank of Canada's Executive Director of Payments, said in a speech at a September conference in Ottawa that governments are moving quickly to regulate stablecoins to protect consumers and market stability. Now, governments are moving to regulate stablecoins and other cryptocurrencies so consumers can reap their benefits and be protected from credit and liquidity risk, Mara said. However, some economists believe Canada will fall behind its peers if approach diverges too far from the international standards. So if the Canadian approach to stablecoins is not harmonized with the American and international approaches, this will isolate Canada from the international payment stablecoins ecosystem. And Canadians will have to use foreign-issued stablecoins within the Canadian economy, impacting monetary policy and sovereignty, said Muhammad Miraj, a partner at the top Canadian law firm specializing in blockchain and fintech. Now, the Canadian market is ripe for digital currencies and economy. So Canada's push to regulate stablecoins comes as domestic companies continue expanding their blockchain-based services. In June, Shopify launched a stablecoin payment option for merchants through partnerships with Coinbase and Stripe, allowing Canadian businesses to accept blockchain-based payments directly. Now, Calgary-based Tetra Digital raised $10 million in early September to develop a stablecoin backed by the Canadian dollar in 2026, with support from investors including Shopify, Wealthsimple, and National Bank of Canada. Now, another Calgary startup, Loon, secured $3 million in pre-seed financing and already launched its own stablecoin earlier this year. Now, Canada was one of the first countries to introduce anti-money laundering rules for crypto in 2014, setting a precedent for global compliance standards. Galaxy Digital, the asset management firm founded by billionaire investor Mike Novrech, chose to list on Canada rather than the US due to friendlier regulatory conditions. Now, the firm, headquartered in New York, launched its shares on the NASDAQ in May this year after being among the first financial entities to issue spot Bitcoin exchange-traded funds, the Invesco Galaxy Bitcoin ETF. Now, Caroline Wilkins, a former senior deputy governor at the Bank of Canada, wrote recently that Canada must create a legal foundation that builds trust, security, stability, and competitiveness of modern Canadian dollar payments. She noted that the US's Genius Act had put wind in the sails of payment innovation, and Canada should respond in kind. So again, Canada needs to get on track with aligning with the rest of the world with their stablecoin rules and laws out there, because otherwise they'll be forced to use the rest of the world's stablecoins and not their own, because if they can't align with it, they're kind of screwed. So hopefully we'll see what they do, if they change their structure of it, if they change what Bitcoin and stablecoins are labeled as, because they do need to become more aligned with the rest of the world. Otherwise, again, they'll fall behind. Now let's take a quick commercial break really fast, and we will be back after these messages with some more crypto news.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine? Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.
And we are back, and I am checking all the other live streams out there. Guys, am I coming up blurry? Because on my side, I am seeing normal screen, high quality 1080p out there. But am I showing up blurry on the live stream? Let me know in the comments. I see you in here, Steven. Thank you for being here at the show. But is the show live stream blurry? I just need to see, like, if I pull up this, like, is it blurry? Can you read the words? If not, I got to reset my switchboard because this is not working. I always want to bring you guys the best quality news out there. So, let me see. So I might have to take a brief pause to reset this, and then I will be right back. So guys, give me a second as I fix this. Thank you, Steven, where it says kind of blurry, but not on the share screen. Really? So this is fine. You can still see this, but because I go to just like viewing the show. I hate when this does this because, again, I'm reading the articles and I want you guys to be able to read with me. And then I see, yeah, so everything's coming up too blurry. So let me still try to fix this. Or I wonder if I may have to re-upload this video because maybe I'll get the better quality at that point. But yeah, sort of blurry and on the share screen. But man, do I want to continue the show? Because when the quality is not best performing, I don't want to do it. So yes, it's good on the share. Okay, I'm going to trust you, Steven. I'm going to trust you that everything's still good. So let's continue on with the news, and let's talk about why MasterCard's $2 billion move into crypto could end banking hours as we know them. Because usually, yeah, banking's 10 to 6 out there, but in crypto, it's 24/7. So MasterCard's rumored $2 billion crypto deals could bring 24/7 settlement to traditional finance, but liquidity risk and compliance may slow it down. So the key takeaways, MasterCard is reportedly in advanced talks to acquire crypto infrastructure provider Zero Hash for between $1.5 billion and $2 billion after earlier exploring and similar sized deals for stablecoin platform BVNK. Now, rather than building every on-chain component itself, MasterCard appears to be exploring the acquisition of turnkey stablecoin infrastructure, provided that it could be plugged into its existing payments network. Now, if that goes ahead, it could accelerate settlements beyond traditional businesses and day constraints toward a more continuous 24/7, 365 model. Now, what the rumored $2 billion really buys is Zero Hash and BVNK platforms, similar to heavy lifting for its institutions. Now, they provide regulatory custody, conversions, payouts, and the orchestration that enables banks, brokers, or processors to move between fiat and stablecoins without rebuilding compliance from scratch. Now, folding one or both into MasterCard would accelerate smallest text on share. Yep, see, I told you, Steven, I wanted to probably re-upload this video after the live stream. But these talks may not be guaranteed to close, but the strategic intent is clear. And let's see if I can change my settings on here really fast. Let's see, settings, camera. Yeah, we're on the 1080 section, so But why is banking hours are starting to fade? Well, card payments today still reconcile through batch windows, weekday cutoffs, and correspondent change. Now, stablecoins operate beyond just the limits of banking hours. MasterCard has already laid down two key pieces of scaffolding for the world. Now, we have the multi-token network, a toolkit to secure programmable transactions across tokenized money and assets. And then we got crypto credentials, a verification layer that allows exchanges and wallets to transact using human-readable identifiers while also maintaining compliance checks. Now, add stablecoin settlements to that stack, and acquirers can receive funds any hour, net obligations on chain, and sweep treasuries within minutes instead of T+1 or T+2. Now, how would this work? Well, a customer would pay with a card or a linked wallet. Instead of waiting for fiat batches to close, the acquirer can choose to receive settlements in stablecoins. Now, obligations between issuers and acquirers are then netted on-chain through approved custody and liquidity partners. Treasury teams can sweep waiting for fiat stablecoins. Where did I even lose it? Can choose to receive settlements. Teams can then sweep funds in near real time, apply programmable rules for foreign exchanges, and fees to convert them back when they're needed. An acquisition like Zero Hash would provide the custody and payouts backbone, while BVNK adds enterprise-grade stablecoin orchestration. Now, for banks and processors, these translators to fewer vendors to integrate and faster times to market. Now, what changes for the ecosystem is for banks and acquirers, their always-on settlement reduces pre-funding requirements and daylight overdraft exposure while easing weekend and holiday bottlenecks. However, it also introduces new responsibilities, on-chain surveillance, key management, and smart contract risks, and their controls must all meet card network standards. Now, for merchants and treasurers, continuous settlements via stablecoins can improve working capital efficiency and streamline reconciliation. Some may choose to hold stablecoins for part of their flows, while others will auto-convert to the local currency. Either way, this transparent on-chain records simplify audits and shorten disputed times. Now, for cross-border payments, stablecoins storing correspondence chains and keep payment corridors open after hours. While they do not remove all FX or tax complexities, they can significantly reduce the mechanical friction that currently makes international payouts slow and unpredictable. Now, what could still slow the shift to 24/7 is fiat ramp limits, operational risks, compliance accounting reality, market vendors. In short, expect a hybrid phase when on-chain settlements continue to expand as fiat infrastructure, policy, and back-office tools catch up. Now, what's next is a few indicators will reveal banking hours and are fading for good. A complete Zero Hash acquisition, a definitive outcome on the BVNK talks, whether a deal is reached or not, USDC or EURC settlements expanded to new regions and acquirers or with volume, and MTN and crypto credentials deployment progress from pilots. So if these pieces all fall into place, settlements will begin to follow business needs rather than the clock. So as crypto and blockchain continue to just get adopted in the system, we will be moving away from just the standard Monday to Friday banking hours. Or holidays, like you'll be able to do your transactions as you please, whether it be in stable coins or the fiat currency, everything will be on chain. But yeah, MasterCard's move could end this. So way to go, MasterCard. Now let's talk about our final article, because I'm not going to be, because of this live stream and how blurry it is, we're not going to talk about how Stream Finance's paused this platform because it's missing $93 million and they're doing a check on it. Or the former rugby league star Trent Merrin charged over an alleged 140,000 crypto theft in Australian dollars. So those two were like little bummer articles out there, but I do want to talk about Gemini's moves toward prediction markets in a bid to broaden its business report. So the firm's filing seeks approval to operate Gemini Titan, a designated contract market offering federal regulated event contracts. So the parent company of Gemini Crypto Exchange is preparing to enter the prediction market business to generate new revenue streams and offset financial headwinds. Now, Gemini Space Station Inc. filed for approval within the U.S. Commodity Futures Trading Commission is set to launch a derivatives exchange in May, registering an entity called Gemini Titan for the operation of a designated contract market, according to 13 public documents on the CFTC website. Now, Gemini had been in discussion to launch products related to the registration as soon as possible. Bloomberg reported Tuesday the exchange reportedly aims to offer services directly rather than through third-party partnerships. Now, the move would put it in competition with Kalshi, the only other active CFTC-regulated event market, and Polymarket poised to reopen in the U.S. Now, it comes as prediction markets have surged in activity, with weekly trading volume hitting an all-time high of $2 billion in the final week of October. But Gemini's foray into prediction markets isn't new. In August 2024, Tyler and Cameron Winklevoss owned a company, submitted a comment letter to the CFTC in response to its proposal for a rule on event contracts. Now, Gemini argued the rule exceeded the CFTC's statutory authority and warned that its blanket prohibition of event contracts involving gaming would hamper prediction markets. Now, were Gemini to list event contracts in the US, it would likely need to operate through a designated contract market regulated by the CFTC under the Commodity Exchange Act. Now, the designation requires the exchange to comply with 23 core principles covering areas such as market surveillance, financial integrity, governance standards, and system safeguards to ensure fair and orderly markets. Now, Gemini's foray into prediction markets comes as the exchange's operator struggles with shrinking revenue, heavy net losses, and waning retail engagement following its September public debut. Now, shares have fallen roughly 49% since the company's mid-September IPO, closing at $16.29 on Tuesday, per Google Finance data. Now, the stock reopened at $32 on its first trading day after pricing at $28 per share, but has lost roughly half of its value since then. Now, while the company has proved their model enough to IPO, it appears that it still needs a breakout business of its own. Ryan Yoon, senior analyst at Tiger Research, told Decrypt. Now, the company posted a $282 million net loss in the first 6 months of 2025, nearly double its $158 million deficit for all of the 2024 revenue, fell to $68.6 million in the first half of 2025. Now, from $74.3 million in the year earlier period, according to an August SEC filing, but more than 80% of Gemini's trading volume now comes from institutional clients rather than retail users, limiting its potential growth in market, while competitors like Coinbase and Robinhood have a strong retail presence. So Decrypt tried to reach out to Gemini for a further comment, but did not get a response by the time of this article. But Gemini is trying to get into the prediction markets, and they're going to do it the right way, because Polymarket is kind of coming back to the US. They talked about it. They got to do some stuff, but basically the only competition is Kalshi. So if you want to place bids on, are we going to have a rate cut this December or not, usually use Kalshi for that predictions bet. But yeah, so Gemini is trying to move into there to try to increase revenue, just tap into a market that, again, really only one company is doing right now. So they're going to try to tap into that space. And we'll see if it comes out. And if it does, I'm definitely giving it a try. But that is it for the news, guys. Sorry for it being blurry. I'm going to re-upload this video, and hopefully it's clear for you so you can read along with the articles. As of right now, we are at a fear territory of 27. Bitcoin is at 103,000, Ethereum 34, XRP $2.27. And if you take a look at crypto bubbles, like we're in the green today. If you look at the last week, it was not good, all red. But as the day chart and an hour chart, we're in the green again. So it looks like markets kind of is starting to recover. People are losing the fear. They're realizing what actually took place this past day. Again, big guys are just shaking out the markets. They deposit money, crypto into an exchange, making people think that they're going to sell it. And so that's going to cause the people to go, uh-oh, I got to sell before they do. And so they sell. And then in the end, they just buy up what you just sold. So traditional markets, how it's played. So if you got a strong hand, like I said, guys, if you're not trading for money, but you're actually trying to change the world with holding Bitcoin and all that stuff, like, you got nothing to worry about. Just keep stacking while you can. But if you're a trader, I'd be very watchful right now. Just, you never know what's going to happen. So that's it for the news, guys. Hope everyone has an awesome Wednesday. Man, it's Wednesday already. Time's just flying by. And I will see you guys again tomorrow with some more crypto news. So everyone take care. Peace.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine, Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.